What's going on, guys? Welcome back to another video. In this video, we're going to be talking about AMC. So I have another very interesting update for you guys on this stock and the potential squeeze, specifically a gamma squeeze that we have coming up tomorrow. So there's going to be a battle, in my opinion, for this $10 price point. We saw AMC get pretty well above this $10 price point today at $10.51, but then some overall things came out about new tax hikes that we're going to go over in this video that really caused the overall market to sell off, with AMC going all the way as low as $9.79. But now we are back up trading very close to this $10 range, and I'm going to go over exactly what we could see out of this gamma squeeze and how big it could really be, because I've seen a lot of things on the internet recently that have been talking about gamma squeeze this, gamma squeeze that, and I just want to make sure that you guys have all of the relevant information and you're not getting too hyped up and your hopes up for a squeeze happening before it is ready. Now, we are also going to go over the current short interest, the utilization rate, and the cost to borrow and the amount of shares that are out in the market available to be shorted. So we have a lot to cover. So before we get into all of that, if you guys enjoy the information and analysis that I provide for you in these videos, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So the main reason why we saw this really substantial decrease in the share price of AMC is if we come over here, Biden to propose hike on capital gains taxes to pay for more child care. So U.S. President Joe Biden will propose plans next week to hike taxes on the wealthy to fund major investments in child care, universal pre-kindergarten education, and paid leave for workers. The proposal will include raising the marginal income tax rate to 39.6% from 37% and nearly doubling taxes on capital gains to 39.6% only for people earning more than $1 million. So that is kind of what happened in the broader market today that really caused AMC to tumble. So when we come over here, this is going to be taken directly from Matt Core's Twitter. He put this out this morning. He's also a very talented YouTuber. If you guys haven't heard of him already, make sure you guys go check him out. He's got a lot of great information over there on his channel. So we can see that the short interest, according to Ortex, is 23.43%, another record, and the utilization is still hanging out around 100%, the max value. The shares on loan, 153.22 million. So the utilization is essentially the amount of shares that institutions are willing to lend versus the amount of shares that have been actually lent out in the market. So when the utilization is at 100%, technically there's no more shares left to be lent out to actually short them and sell them on the open market. But as I've said before, even though the utilization is at 100%, that doesn't mean that shorting cannot occur. We've seen a lot of naked shorting happen on AMC, GameStop, and a lot of these other different stocks that have been aggressively shorted over the past couple of months. And that also leads me to believe that this 23.43% short interest number is actually a lot lower than it actually is, because if there's a lot of synthetic shares out in the market, the actual reported short interest is obviously going to be lower than what the actual short interest is. Then when we come over to iBorrowDesk, this is actually pretty interesting. They've been typically very good at keeping up with the cost to borrow fee rate. Now, right here, we have it at about 26.1%. That means that the actual fees in order to borrow in short shares of AMC is 26.1% per year. That is a very significant amount, which could suggest that a lot of these funds and institutions are going to start covering their positions, because it's going to be too expensive for them to actually keep these short positions on their balance sheet. But when we come over to Fintel, we can see that they also are not including the short borrow fee rate. But when we come over here, they actually have updated the amount of shares that are available to be shorted on the open market, and they have it at 0. But with all of these different data sources reporting different things, you really can't trust what we are seeing. I'm just pointing this out to you guys so we have a decent understanding of what is going on in the market at the current time. So now let's go over and take a look at AMC's option chain and go over exactly how this gamma squeeze could play out and explain to you guys exactly what that is and why it's important at the current time. So when we pull up AMC's option chain, we're just going to go to the expiration date that expires tomorrow, April 23rd, and we can see that this $10 strike is now out of the money when it was previously in the money, and there's an open interest of about 31,720 contracts, which essentially means that those are the amount of contracts that are being held in people's brokerage accounts at the current time, because open interest is essentially the amount of contracts that are out in the market being held that have not been exercised or closed. And we can see the volume on this specific strike today is about 19,660, with the $10.50 strike having a volume of about 26,262. So that is the total amount of contracts traded during the trading day. And now we can see up here that AMC is getting pretty close to this $10 mark. So let's go over how a gamma squeeze plays out. So essentially what happens is when you go and buy an options contract on the option chain, you have to buy it from somebody. Typically, you are buying it from an institution that is selling a naked call to you, and they are essentially really at risk because when you sell a naked call, the potential loss is unlimited. So what they have to do is that when the price gets really close, the share price starts to get close to a couple of these strikes that have a very significantly high open interest, what they do is they go out on the open market and buy the appropriate amount of shares. So when you buy options, it technically doesn't move the share price, even though recently, if you guys have been paying attention to some of the call sweeps that I've been able to look for, and I've seen this a lot, when there's a massive call sweep that comes in, it typically bumps up the share price, but options are derivatives, so they derive their price from the underlying stock, so that is technically not supposed to happen. So what happens in the gamma squeeze situation is that when the price starts to get really close to a specific strike with a very high open interest, the institutions think to themselves, well, we have a lot of exposure. So what they do is they go out in the open market and buy the appropriate amount of shares. In this situation, on this $10 strike, that would be about 3 million shares. So that is not a significant amount to really substantially move the share price. But what you have to also keep in mind is that these contracts are going to expire. So they have to deliver on their obligation, because an options contract, if you are buying an options contract, it gives you the right but not the obligation to buy 100 shares of stock on or before a certain date at a specified price. But when we take a look at some of these other expiration dates, so for next week, we see an 11,000 open interest, which is going to be another 1.1 million shares. We come out to this May 7th expiration date, we're going to see about 700,000 shares. So this is kind of up to the discretion of the institutions, because these contracts do not expire right away. So we could see some more buying pressure in AMC tomorrow, but this battle for the $10 price point, I think, is going to be pretty insane. But I want to make sure you guys understand that the gamma squeeze is not an end-all be-all, because it's really not going to change the trajectory of the squeeze over the long term. And we aren't seeing a crazy amount of open interest on this $10 strike, similar to what we saw last week when the open interest was much higher than this 31,000. What this gamma squeeze would actually do to help our cause as AMC shareholders, or if you're just playing longer-term options on AMC, if the gamma squeeze triggered and it would push the price of the stock up due to more buying volume, this could then actually trigger the beginning of the actual short squeeze, because if the price starts to spike for apparently no reason and it goes past a certain point, the big institutions and hedge funds that are selling naked shares on the open market, they are naked shorting AMC, would be forced to cover, which would then force the price up even higher. So the gamma squeeze could be a very helpful tool in order to get AMC to a certain point that would trigger the short squeeze. But again, it is not the end-all be-all, and I don't think that there is going to be an absolutely insane amount of buying pressure due to this potential gamma squeeze that we could see tomorrow. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys were able to have a really profitable day, and I'll see you guys in the next video.